Hello and welcome to Leviathan News. I'm your host Samuel McCulloch. Today is it's March 11th or 13th, and
13.
13th, yeah. And today I have a good friend of mine, Matthew Land, from Marshland Capital, who we have had on the show before, and I wanted him to come in and sit down and chat about macro and crypto narratives at the moment, because I think that we're in this really interesting place where we actually don't have a narrative, and macro is going a little bit wild, and it's thrown a lot of the market into chaos uh, for anything that's not Bitcoin. So, Matt, how you doing? Welcome.
Good. I appreciate you having me back. Thank you.
Yeah. Well, before we dive in, I just want to take a minute to shout out our sponsors at FX Protocol. These guys have one of the most interesting places to get leverage on chain, and you can come and take up to about a 10x leverage long or short, and go out and trade the market. So make sure to check out the QR code in the top left here to find out more and to go check out their products. So my dog wants to come in and out all the time. um, it just like scratches, wants to go to the other room, scratches. But yeah, so here we are. We're like almost 100 days into Trump's presidency, and the markets are like pretty wild. The introduction of tariffs, the removal of tariffs, the reintroduction of tariffs has just thrown a bit of chaos into the markets where there hasn't been a ton for the past several years. Additionally, we seem to be moving to a place where Trump wants lower interest rates at the same time, and we're hitting this like interesting place in the market where asset prices, maybe too expensive. They need to come down quite a bit, and at the same time, interest rates need to come down. So, like, what's your kind of prevailing thoughts on the kind of U.S. impact of the market right now and how you're approaching things?
Yeah. So, I mean, I think we're all just waiting for cheap money to come back into the market, looking for some sort of Fed pivot. That's kind of the de facto stance. I think you may have mentioned ETH at either prior to hopping on or just in your monologue. That's been going down for about 4 years since the last time we actually had cheaper rates. But you know, Trump's battle right now is really directly against the Fed. It's getting a cheap dollar. It's bringing oil down. It's making things cheaper for consumers. Meanwhile, hiking tariffs and trying to get production back on shore, which we haven't probably seen since the Clinton administration, when he's outsourced all the jobs under NAFTA, and he's just really kind of reestablishing America on the front stage and saying like, look, I think he said today in I think he said today in the tweet, he said we don't have trade policy, we just have bad trades, right, or something along the lines of that, which is whatever. But yeah, at the end of the day, it's we're the largest consumer economy, or one of the largest consumer economies on the planet, trillions of dollars spent every year, and because of that, we just don't tariff people, and they tariff us, and now we're shifting into a retraction from the world economy, where America is leaving the global stage, to some degree, more of isolationist policies, American fatigue in all these foreign wars, and all this stuff that you can go on and on and on about. But at the end of the day, it's time to start having reciprocal tariffs. And I think all of the countries that you see around the world, the EU, Canada, etc., they're all just stamping their feet because they realize the party's over, right? They've had this, amazing 20 or 30 years where they were able to prop up these socialistic economies off the back of, what they ship in and out, to countries like America, and now they realize it's going to be a hard time, and maybe we'll have a 51st state and annex Greenland or something like that, and who knows? But it's definitely a different world. It is similar to Trump 1.0 in some respects, as he was very aggressive on tariffs and Biden maintained those tariffs. But this is new, bold. I don't know if you want to call it leadership. We won't be partisan here, but this is a bold first step towards just a new world in general.
Yeah. So taking a look at equity markets, I mean, we're only really what, like 5-6% off the highs.
Mhm.
There's been a lot of freaking out over not that much. Like we're not in like deep bear market yet for equities. Um, we're not seeing huge pullbacks in the S&P like we saw back in 2020. Uh,
Mm.
the market seems to still keep on chugging, even though a lot of this tariff has thrown potential chaos into trade relations.
Yeah. So if you want to switch on the screen really quick, for the charting side of things, the QQQ is the barometer for this market, right? You may have been S&P during the last market cycle, and I have a theory around that. So up until this point, Mag 7 has been leading the market. They take up most of the gains. Mag 7 is the Magnificent Seven, is basically the top seven stocks, such as like Nvidia and Tesla, and just high beta stocks, right? So during this kind of like low risk period where rates have been somewhat heightened, and cheap liquidity has not been as accessible, and we could talk about TGA and all of that in a second. I think people are looking for safety bets, and AI and technology has kind of been that leading North Star post COVID, especially in the last 2 years. So, that's why I think that the QQQ, which is a composite of the Nasdaq, is a better it's a better barometer for what we're looking at. And if you look at the S&P, which was a broader swath of tech stocks in 2021, that made more sense because we were in a cheap liquidity environment where risk can be embraced. And when you're in higher risk, you're willing to become more diversified in higher risk stocks or higher risk investments, right? And there's other things that kind of jumps to. The Nasdaq correlation with Bitcoin has been insanely high, to some degree. Now, I think this is really your first test because you have fear and volatility in the market of where do we stand. So if you look here in terms of this ascending channel that we see, we've seen kind of, and this is right before the channel, but we see that price is just looking to test the upside, right? We almost see no test at the downside. We test the downside, but we never break it. So it makes sense now that we're having this first kind of shock to the system, so to speak, that we're not going to see the opposite of what we saw up here for, in my opinion, what will be a brief period of time. I think that we're still part of the great melt up right now. There's a number of different data points that we can look at to kind of justify that, specifically around the fact that DXY, 10-year crude, all gradually going down, not like jumping off a cliff, but gradually going down. I do think there is some risk in the junk bond markets, specifically because we're starting to see, specifically, I think they're all the same chart, but what junk bonds are is essentially like corporate credit loans for high risk companies, right? They issue these junk bonds, and this is more of an ETF, but it shows you kind of where that market is. It's withstanding the support right now, previous resistance from 2024. But if we lose this level, then you may see some risk blowups due to just the light pressure of the scale that you see going on. High beta are also, I think Nvidia is the only one that actually looks good. Tesla's been bleeding out forever. ARK Investments is now back into the previous range that it had a false breakout on. So Nvidia was kind of the shining star of Q1, and it, quote unquote, had the hell. I think Amazon was Q4's shining star. You know, um, there's things like I actually really like this chart right here. This is kind of tail of the tape for the last few weeks. So Baltic Dry Index, Baltic Dry Index basically is it has to do with shipping, like around the world, like how efficient is it and how cheap is it to be able to ship things based on like different types of ship, right? When we're increasing, that means that it's cheaper to move goods around the world, and this is what to kind of like circle back for a second. This is what Trump is trying to do right now. He's basically trying to get the dollar cheap, put production back on shore, battle the Fed, get them to pivot. The narrative that we need to focus on as bulls right now to be like, well, how do we get things to go up just generally in terms of cheap liquidity is, you know, we had a really good we had a really good inflation report come out. We had the some more inflation data come out today as well. All of those are pointing to the Fed should be easing. A Fed that's always late, right? They should have been cutting rates in January, in my opinion. But this is a historically late Fed. Very like we don't want to have to get into a Volcker moment Fed, so they're very conservative. So they were late to the party to raise rates. They were late to the party to cut rates, or in their opinion, they're just on time, right? They're like Gandalf the Grey, uh, to some degree. So, you know, now what we're going to see is that we don't have any rates in April, right? You're going to have a lot of kind of like quarterly closes that were very relevant, especially in the real estate market. And you're already kind of starting to see the cracks in oil. You're seeing the cracks in the 10 years. So people are looking to embrace more risk. And I think what we've been seeing is kind of just a flush out or more of a capitulation of that risk on trend due to the volatility. But I really actually don't even believe it really has to do with that. I think I saw I think I saw, who was it? Warren Buffett came out and said that Trump is doing the best job of any president in the last 50 years. I mean, in what world does that happen, right?
Yeah.
And I don't think he's wrong. Like I think all these people who are out there who are saying like, oh, Trump doesn't have a plan or all this stuff, there may be some like mild credit to that statement, but it's very obvious what Trump is trying to do, right? Get cheap dollars flowing into the system, get the Fed to pivot, lower rates, end the war in Ukraine, get even cheaper oil, make things easier for Americans again, versus the last 4 years that we've been living in where everything's been really, really expensive for Americans. How are you supposed to get price down at the dinner table? It's going to start with energy, right? And then it's going to start with the dollar, and then it's going to start with how much credit can they get access to. These are just there's only so many levers in the economy that you can pull, and it'll take some time to see that impact. But I think really where we're at, and the statement that we need to convey to people today, is buy the rumor, right? Buy the rumor that the Fed is pivoting in May, not June, and that it's going to be more than just a half a cut, half of a bip cut this year. It's going to be more than that. Ideally, 75 bips, maybe even more than that. Because we're starting to see inflation is seeing the first impact since maybe like July of 2024, right? And then from there, we're probably going to have a Plaza Accord 2.0, where Trump basically just devalues the dollar and China starts printing like mad, which we've already started to see the early indications of that. So for anyone to be bearish at this point, it's probably because they've been stuck in high risk alts since 2021, and they've lost 90% upon 90% upon 90%. But this is the time, and obviously not financial advice, but for me, this is the time to rotate into risk assets. We're getting close to that bottom. And we've actually, you talked about ETH BTC. We've actually, let me bring this up here. We've actually seen ETH BTC. It was in this descending channel since 2022, 2021, really, and we've now seen it jump out of that channel, and it's now starting to, just kind of free fall, which is what we expect almost every time. We're ready to go, right? It's been incredibly tough, because there was a false sense of security in the alt market that came from the asymmetric complications of the low risk environment, right? Things like hype, things like meme coins, just things that were like very much within a bubble. Things like virtuals. These were asymmetric bubbles, and we could talk about memes in a little bit later. But these were asymmetric bubbles during a high risk environment that were very liquid, that you can get in and out of very quickly. I think 2024 from the altcoin market perspective was driven by airdrops, driven by liquidity, right? Cheaper but thinner liquidity too. Like when you look at a pump fund, it's like 79 SOL, versus like an ICO startup in 2021 launching with 250K in LP, right? Different market profile, different market psychographics, stuff like that. So I think I'll take a pause there, and there's a lot to kind of digest.
Yeah. So I think the dollar is probably the main indicator here. Can you bring up the DXY chart?
Sure.
Yeah. Um, yeah. So um, yeah, we've already started to see it trend down, but it's really breaking that low right there at 100. Um, that that I think is going to be the big thing, right? We're really needing to see the dollar get talked down, interest rates get talked down, and
Mm.
you're I think you're spot on in that assessment that in order for us to really kickstart trade and drive the price of international goods down, one, it's the tariffs, then two, it's having a weaker dollar that we can compete with China with.
Yeah, I mean it's really all about the dollar. I'm not sure. I think it's really going to depend on a number of factors. Like, I think people will look at the inverse yield curve and they'll be like, "Oh, well, a recession's inevitable." Um, it could be one of those weird situations where like the recession already happened,
Mm,
right? And people aren't don't even realize it. Or it could be a situation where it does happen, but the stock market it's not like an '08 banking crisis, right? Because like when you're in a recession, everyone's going to point the finger every which way, and I have no doubt that the opposition to Trump will leverage um, fear around a recession to try and put him in a box, right? I think that the State of the Union address, it's not really a State of the Union, it's less than 1 year, but it was very telling, right? I've watched every State of the Union address dating back to you know, probably Clinton's first term. I was like 6 years old at that time, right? Or around that time. I think he was elected in '92. And I've never seen an opposition party not stand for a president walking into the room, let
yeah.
alone not let alone not applaud a child who has cancer. It's so that's the state of the country right now. And it's the reason why Trump was elected as a populist president. And the division between these two sides are only going to get worse. So because of that, both sides have embraced heavy amounts of propaganda, and that propaganda breeds for more volatility within markets because there's this constant news cycle of fear. So I do believe that this will probably be, I won't say it's the first time because I'm sure it's been a little bit more subtle, but I do believe that mainstream media will try and exacerbate some narrative around a recession when we may already be past it, in which case you may see like an opposite of reaction, right? Depending on where the recession is really located. I think the Atlanta Fed, when they came out with their very odd GDP drop forecast, I'm not sure if you saw that, went from like 2.8 to like negative 2.5 when no one else had really made that prediction. They specifically said the reason that they made that prediction was because of the auto market,
Mm,
right? And that's why Trump kind of backed off tariffs with Mexico for the immediate future and kind of kicked the can to April. But how low can you get the dollar? I remember, I think it might have been in the Obama administration around the '08 recession. I believe the dollar was as low as like 86 cents. It had to go all the way back. Yeah. So like I remember this time where the dollar was, I think my wife was taking a trip over to Europe at the time, and she was like, "Yeah, it's probably a terrible time to go to Europe because the dollars are so cheap." But since then, like now everyone's going to Mykonos or whatever. They're probably just loving life as a dollar holder. So, yeah, we've been since really the '08 recession, we've been in an upward trend of the dollar. So if you lost 100, there had to be some sort of um, it just doesn't happen like that. Normally, there's a significant reason why that's happening. So right now, I'm projecting kind of this smaller head and shoulders pattern to play out down to 102, and I think you will retest this 100 line on the dollar. But I don't think we're there yet. But I do think it's Trump's intention to just get a lot of cheap money. During Trump's first term in 2017, 2016. We had the 2017 run up. And then 2016 to 2017, he dropped. Not to say he dropped, but the DXY dropped down all the way to 88, and then shortly after COVID also dropped. So there's a path for lower dollars to happen and get back into this range, and surely Trump wants to do that. I'm just not sure the economy will necessarily let him immediately, which I think goes into a broader conversation around whether or not Bitcoin is in a super cycle. And there's a lot to talk about with the ETF compression as well. I have some
Yeah.
big theories on that side.
Yeah, I mean, Trump's really trying to thread the needle between driving the dollar down, lowering asset prices, specifically home prices, and driving interest rates down at the same time, which I don't know if it's possible because in order for the housing market to really unlock, house prices would need to come down like, I don't know, 10, 20, 30%, plus mortgage rates need to come down maybe like 1 to 2 points because everybody refinanced at like 3%, 4%. And so like why sell if you refinanced and prices are up, like there's nowhere that you can go. And so you're kind of like stuck.
Yeah.
Yeah. One of the things that I think it was Balaji that I saw say yesterday, and I kind of like clicked. I was like, okay, why didn't I think about that beforehand? And maybe this plays into the Bitcoin super cycle that you were talking about. Is that if Trump's goal really is to like drive down asset prices, save like the S&P or housing or something, you're really going to see like really high quality assets become cheaper. And if crypto is becoming cheaper as well too, at the same time, there's actually like less money that can flow into crypto because if you look on a relative basis on two cheap assets, you'll take the one that has that you think is higher quality, which would be in this case like S&P or like housing or something else. And it's going to take some longer time for capital flows to really come back into Bitcoin and crypto as a whole until the market kind of like rebounds and we get away from these like undervalued or not undervalued, but like cheap at the time, relative cheapness.
Yeah, I don't have the chart for it, but I know one of my good friends charts copper versus gold, and this is a very similar argument to that, and that's kind of one of his thesis for the bull market. But we see it in Bitcoin, and this is a little bit of a symptom of the ETF. ETFs cause compression when they leave the market. And I actually think that seeing the unwinding of the ETFs to some degree is very healthy for the market, because I would rather not retail buyers, but I'd rather ETF buyers kind of be late to the party than be early, right? But we need to understand the nature of the ETFs first. So all of the Bitcoin ETFs are essentially long short strategies, 2x leverage, essentially. They're hedge funds that are running 2x leverage, capturing the spread. So if you're running long short strategies or you're running hedge strategies, then volatility is not your friend. You're looking for actually price compression, which I'm not sure if this chart has it, but yeah. So we've just seen kind of this. So this is like my own custom VIX, right? We've just seen kind of this like really consolidation of compression to the downside. Specifically, both of these compression zones saw this volatility compression in the market specifically, right? So what that means is like we are not going to have some big blown off top until ETFs are not the driving factor in the market, right? So instead, we're just going to see what you saw here: consolidation to the downside, breakout. Consolidation to the downside, breakout. I'm assuming when the Fed pivots, we'll see another breakout. It'll probably go up to like 130, 125, something like that. Which is why I think we're nearing the bottom. I would like to reclaim 86,634 to have some sort of 3-day bullish engulfing fractal here. But right now we're at the bottom of the wedge, and that's just how it is, right? But getting back into this consolidation zone would be critical. Almost Wyckoff-ish, if you believe in that, right? So I want to reclaim these levels because I think that we're just gearing up for that next piece. Ideally, gearing up for that next piece where ETF is chasing price, and then you'll probably go into another consolidation zone. So to what he's saying about kind of two cheap assets, it may be like a minor story within a broader narrative.
Right.
If you ask him, he may be saying what I'm saying is the same thing, right? Ours is a minor story in his broader narrative. But at the end of the day, if cheap money is flowing in and people are going risk on, and the government's ready to print and devalue, you know, my good friend Mark says he says, Tina, there is no alternative,
Right.
right? The government has to refinance this debt. The government has to print money. The government cannot. You will never see a Tip O'Neill or whatever, or with Newt Gingrich and Clinton balance the budget again. Not now, not ever. Um, so unless they buy up a bunch of Bitcoin, the price goes to 10 million, then they erase their debt. There's just no escape from the future that we have. Like it's a runaway train when it comes to money supply. So if it like when I look at a price, and I think I said this on our last call, there's only one thing that matters. It's right up here in the left hand corner, right? What does Bitcoin trade against? It trades against the US dollar,
Right.
right? And what does the US dollar represent? It represents debt that the United States distributes around the world based on all the spending that they do and printing that they do since 1970, whatever, 1, 2, whenever the gold standard got repealed under Nixon, right? So there is no alternative. We have to refinance our debt. That's why Trump is trying so hard to get rates down. People are hoping that it's not going to, cause some sort of, economic friction. I'm not seeing it yet, and I think, when people like, Charlie Munger come out and say that Trump's the greatest president since sliced bread, that has weight.
So the super cycle's not over yet then.
Just starting. So, you look at Plan B, every single one of his like 4-year cycle lines, and I'm not saying we're still in 4-year cycles. I think we are, but if
Really?
you look at every one of yeah, I think I know that's like a weird topic, but
No, it's not,
if you
because, like, I would have, like, my assumption of the 4-year cycle is like, okay, when it was largely retail driven plus a mixture of unsophisticated funds, like, sure, like, it makes sense, right? But now that we've pretty much had every single major institution globally start to dip their toes into it. I mean, these guys have shops where you're competing against a like double PhD computer science guy who like wrote the book on like second order, third order like options trading, right? You just can't compete against him. And so when you get that level of participant into the market, the things like the 4-year cycle just like they don't exist anymore.
Yeah, so for at the end of the day, and this is really funny because Wall Street looks at Bitcoin as a technology stock,
Hmm.
right? It doesn't look at Bitcoin as how we look at it, right? Resistance against oppression and storing our money. Like we come from a different guard. So all these people who are buying these ETFs, they, the joke of it all is in some of my private communities we call it the Mag 8, right? Because Bitcoin is the eighth technology stock to the Mag 7 on the Nasdaq, essentially. So why that's funny is because like if we look at it as a technology, things like power law and cost of mining and all of these different economic incentives are the relevant driver of it, right? Yes, you have all these buyers, there's also sellers, etc. But at the end of the day, like the nothing has changed around Bitcoin. That's why it's the Big Mac of crypto. It's it just is what it is. McDonald's serves hamburgers. Like we don't need to overcomplicate it. But the point I wanted to make was if you look at kind of Plan B's predictions, and I know some of it is deviated, here and there. It's a one standard deviation up or down, right? And I think this cycle he's calling for like 250K to 1 billion or whatever. But the odd thing is that like I think in each prior cycle of Plan B's like power law prediction, the price hit the power law within the first, I think, the following year to the halving year, right? And though history sounds similar, it typically does not exactly repeat. So I think that we've kind of just been situationally biased to the fact that Bitcoin's price has to hit certain levels earlier in the cycle. And I think given the uniqueness of this cycle, especially with the Fed's, um, the Fed's elongation of risk capital and how they're trying to implement synthetic QE through the TGA in terms of drawing down their accounts, printing T-bills, and then giving liquidity to banks. And China's doing the same thing, but they're putting their liquidity into the stock market. And then the ETF compression as well. All of that together expands when we're going to see more parabolic price action, right?
Yeah, well,
So I think we're still in a 4-year cycle because the 4-year cycle is going to go from 2024 to 2028, right? So people will call it a super cycle because it's abnormal to what they're used to, right? But in reality, it's just another 4-year cycle.
How much of this last move from like 60,000 up to the current all-time highs do you think was leverage driven? During that last period from the latter half of last year, we really saw like the basis trade just take off. I believe Athena's rates that they were capturing were like double digits, upwards of like 25% for months and months and months. And now we've seen those kind of come down and compress, and they're normalizing again. I think it's in like the 5 or 6%. So demand for leverage has subsided, and we don't really see too much of that like exuberance in the borrowing or leverage markets. And if you look at this chart here, the one that you have for Bitcoin, we kind of had a channel forming for pretty much like all of 2024. And then we finally had the breakout. That's when markets started to get a bit exuberant. The leverage really kicked in. We peaked, and now we're kind of reconforming. The leverage is coming down, and that's why price is coming back down again. What would you say to that?
Yeah, well, I mean, part of as a side note, this is why I'm so bullish on Ethereum, right? I know a lot of people like to kick Ethereum when it's down. The three, to me, the three biggest expanding protocols all came out of ETH this past year, right? Athena, Ondu. I mean, some of these have been around longer, but they've seen dramatic growth in 2024. Athena, Ondu, and Hype specifically. That was an L3 on Arbitrum, for reference, right? So I think that all those products have something in common. You mentioned the leverage side. Some of them have more of the stablecoin side, right, or T-bills, or specifically. Athena is more asset backed, and I think Ondu is more driven. But I think Pantera was like the largest capital on chain. That was like, it was either Pantera or somebody else that had like a ton of money in stables that were just getting pounded into those protocols. But the last year the market was driven by ETFs, and ETFs are leverage products, specifically the Bitcoin ETF. They're 2x leverage. We talked about that before. So why are people looking for less leverage today? It's because there's uncertainty and risk in the market, and they're worried about rollover, and we all know what happens in downside markets. Now people are trying to make this narrative around how I don't know if you've heard this yet, but the Ethereum Foundation's like strike target on Maker is like 1100, and that's now an anchor. As look, the Ethereum Foundation is like Circle. There's going to be someone who comes in and bails them out if that ever happens. Like, to think that there's not going to be a long line of whales and hedge funds just ready to defend that position is foolish. Like, they're incentivized
as well too.
Yeah, it's not even that big. So I just don't think that it's not to say they can't go to those levels on a flush out, right? Not to say there's not like one last like hurrah push, but I'm just not on board with that. I think that this is the bottom, or I think we're getting close to the bottom. I think that the Fed's going to pivot. I think we're getting ready to move into a new phase of the market, and I'm not really that worried about a recession right now. So I think it's time to buy.
I mean, but we could see like another like 10 or 20% move down in Bitcoin. Like there's no reason that we
Yeah.
couldn't test that $60,000 channel again.
There's no reason. No, I don't. Yeah, I don't like to say that there's um anything's possible, right?
Yeah,
It's
anything's possible.
yeah, it's
Um, and
yeah,
especially like can we go to the ETH chart? Um,
yeah. Yes, we can.
so this one, uh,
Let me just find the right one here. Yeah, I
uh,
think this is the one.
yeah, this one it causes me a lot of pain, and I think that's where pretty much everybody else is. The timeline has crashed out on Ethereum. Um, I everything seems fine. Like I think if you have a good amount of stables and allocation, but uh, like the ETH as a whole has just really really suffered this past 6 months. Right, we've come all the way down from 4,000, and now we're trading at 1,830. So
Mhm.
like I'm sure it's possible that we could go down to 1,500 or even 1,300, but I mean you're talking about a difference of like 30% versus some of these asymmetric bets to the upside that you're going to be able to get.
Yeah, I think ETH is. I just want to make sure if I have the chart here. It doesn't look like I do. Yeah, so I think that I think when it comes to Ethereum, we have to talk about a number of issues. So the first thing is that Ethereum pivoted to battle for retail users down the road. They realized that their main counterparty cared about the fact that they had zero downtime and that they're considered to be truly decentralized, and people were the buyer for the fees that they were shopping around. The delta had to be higher notional, right, for the end buyer, so to speak. So they made a sacrifice, and that's where the merge came, and they decided to go for a more parallel scale. And I think that makes a lot of sense when you've already hit your friction point, and you've already captured a lot of user capture. If you look at companies like Cosmos or Polkadot, who tried kind of this like multi-chain, multi-parallel scale when they didn't have user scale, like it just ended terribly because they were just compartmentalizing their user base. So the fact that Ethereum was where it was, they had to make a change, and that change meant that down the road they could come back and compete for consumers. And I think that this was the right choice, because consumers aren't necessarily here yet. All we've seen is a bunch of Zoomers on TikTok who want to buy meme coins and speculate and get rich. So, we're starting to see the very early stages of consumer applications. What I call and we'll talk about this a little bit later. I call it the tokenize everything economy, right? So when that happens, we will have more consumer products that really just focus on Web 2, but have Web 3 rails, and that are like Web 3 native for a specific sub demographic, right?
Well,
But
I completely agree with you. I mean, you look at the biggest app of last year, and it was Moonshot, right? Like,
I thought you were gonna say Pump Fun, but yeah, we can say.
well, I mean, Pump Fun is still like a protocol, right? It's not really like an app, right? Like it
Mhm.
was Moonshot who came along and uh, provided a beautiful UX and allowed just people to come in and like buy stuff. And it really changed a lot of the market dynamics at the time, because like getting listed on Moonshot meant that you had access to like way more uh, eyeballs and also capital. Um,
I think so Reg Domain had said, zoom out, ETH DeFi is unwinding. I think the better perspective would be that the ETH DeFi is changing, right? We've now seen Maker, and now Morpho's coming out, but we've seen Maker and some of its conglomerate products now shifting to RWAs. And this is like a more comfortable narrative for capital expansion, because DeFi in isolation is just like a losing bet. You're talking about low yields for high security risk. There's like a false sense of security, I think, on the RWA side, where they're like, well, I hold the assets, right? So we can just roll back whatever we need to roll back, and the value of the assets are still protected. Because like the best thing about tokens, like the only good thing about tokens, is that they're highly liquid and unregulated to some degree.
yeah.
Uh, so that they move, the efficiency of them move at a much cheaper cost with less middlemen, even if you regulated them, right? So, to have real world assets on chain, which is the tokenized everything economy, you're just seeing DeFi. It's not DeFi anymore, but they're still going to call it that. Look at the products that succeeded in 2024. They were real world asset products. They were, a little bit more centralized in some degree, but they had a decentralized underpinning in terms of how they traded, right? In terms of just being able to launch a liquidity pool and not necessarily have like a KYC restriction on them today. And I think that's where people see, if you look at Artemis and you look at TVL increases on Ethereum, they've increased TVL a bunch into all these different protocols over 2024. Their DEX volume also stayed somewhat competitive, right? So it's not like they dropped off a cliff. They were growing in the right periods and they were stable in the wrong periods. So, the problem with the problem really is the correlation of each price with the incentive mechanism. When you're on Solana, pump fund is the primary driver. It still is today, but it was the primary driver in 2024. And what people aren't considering with pump fund is that you have 20% of liquidity essentially, just getting locked away forever. And then you have to buy ETH to buy the products. Like now on ETH, for all the things that were driving kind of the TVL or whatever, it didn't necessarily, you weren't like, it's not like ICOs where you had to buy ETH and buy that. So there's not a direct correlation. So they're kind of like resting on their laurels in terms of the deflationary argument, which hasn't really come to full fruition. I think it's like mean reverted at best. But where I see in 2025 Ethereum being more competitive is the fact that they're running out of blob space, and you basically have set up this corporate structure where corporations like Coinbase essentially manage their own infrastructure, L2s or whatever, and then charge fees. And up until this point, the Ethereum Foundation has just been, kind of patting them on the head and not really, playing hardball to offload higher fees onto them. That's going to change with the blob market. They did decide to double it recently, which I was surprised that they did. That was kind of like, I thought it was going to be the Bitcoin big blocks moment for Ethereum, but they decided to do it anyway. But that's only going to kick the can down the road about a month or two, maybe 3 months, and then at that point, basically, it's going to create a centralized bottleneck, in my opinion, where companies like Arbitrum and Coinbase or Base will basically be the primary competitor between those blocks. This is what's going to expand the pre-confirmation market. It's what's going to expand the block space auctions market. It's going to start to design hedging products for large trading firms like Wintermute and others. This is what the expansion of Ethereum is going to look like. And I think that prices are going to have to rise due to the demand of that auction block space. And because of that, the sequencers are going to have to decide, okay, well, are we going to pass the buck off to the client, or are we going to just eat the cost and go smaller margin? I actually think they have to eat the cost and go smaller margin, because at this time, they can't compete with high throughput chains like Solana and Move. So, and it's not to say that they're superior. I don't believe they are. I believe there's a lot of problems over in each of those categories, and at the end of the day, Ethereum is the gold standard for smart contracts, in my opinion, and that could be debated. But I just think that they're going to eat the cost, and the price of ETH has to go up from a demand perspective, because they're just gobbling up all the block space, and they just have to pay more. Right. And now you have an incentive mechanism that can actually rise the price, not to mention the adoption curve. And then your deflationary stuff can hit on the back end at a much higher rate, So that's, I think, the bull case for Ethereum, especially when you're on the backdrop of cheap liquidity ready to go into the market, as we've seen pretty much every cycle of Ethereum dating back to 2016. So
yeah, if you go back to the ETH BTC chart that we were looking at,
yep.
the top of the chart was the merge, and after the merge, we had a period of kind of sticking in that upper channel up there, but then once the blob market came in, I think people's understanding of like where ETH is going to capture fees and why people are going to buy ETH radically shifted during that time period. It was like, okay, the L2 takes the marginal cost of transactions, down to like a couple of cents, right? And then we're going to have infinite L2s to that we can just spread all this demand out. And so like block space is going to become very cheap. So the price of ETH doesn't actually have to be that high.
Yeah.
There's not going to be much demand, and like we rarely see gas spiking over 100. like like it's very rare now.
Yeah.
But at some point the capacity for the L2s has to catch up, and then that block market has to become competitive, and then we might see like gas auction rates start to rise again.
Yeah. I mean, if you look here on ETH BTC, right, we've just been making higher lows every single market, right? Here is the beginning of ETH. Here's the ETH infancy prior to ICO mania. Here is what I like to call vapor bear, which everything was vaporware, and we went into a bear, and then COVID, right? And now we're here, and here's the critical trend line. Capitulation is happening. We're going into a higher risk market, ideally, and I think Ethereum has caught its breath, right? This is I'll put the flag in the sand and say a monumental day for Ethereum. They timed the top perfectly to pivot. They've been building up their new ecosystem. I just for just looking at its sake, right? I just want to look at Artemis just briefly. This is Solana versus Ethereum, and this is the last 365 days, right? We've seen stable coins expand on Ethereum. We've seen TVL expand on Ethereum, right now, or at least maintained, because we've had a downturn in price.
Yeah, I mean, if you look
at
the
if you look at it in ETH, right? Specifically, so ironically, actually, on DeFi Llama, this is really funny, and I just want to show this because I'm a big bag holder of this and got wrecked on this on this trade. But there's a token out there that's a competitor. It's not a competitor, but it's similar. It's usual, right? And if you look at usual, where is it here? I'm on the wrong one. Let's come to chains. DeFi Llama is so slow. What I want to show you here is usual, even though its price has come down, the governance token has come down 80%. So if you look at the TVL, they're around 900 million. Was a billion, I think, the other day when I looked at it. Look at the TVL; they had this massive expansion up to about 1.85 in USD notional, and you would think, oh, the TVL must be leaving the ecosystem, right? No. If you look in terms of ETH, we're actually going to be breaking a new all-time high, and you're going to see this in a lot of different ETH protocols. So while price is coming down, people are taking their ETH and saying, "Hey, I'm putting my foot in the sand, and I'm ready to deposit into these different protocols." And I think that this is kind of the moment where it's like, okay, we're on the precipice of seeing what post-merge Ethereum actually looks like, right? And will consumer apps be able to compete on places like Base and other L2s, specifically Base? I think Base is like primed to be consumer app city because they're the largest brand conglomerate, and brands tend to capture better, like more users, right? So, I think it's just it's a good time right now for Ethereum, and I think we're on kind of the precipice. I also think like the meme coin washout and all of that. Like, let's just talk about that for a second.
Can you pull up the Solana chart?
The Solana chart, absolutely. Yeah, let's bring that up. So I used to have this really amazing drawing here that's not here anymore, but it was essentially it's all these charts are showing some sort of wedge pattern, but this specifically was a very steep wedge. So I think I was like the only person or one of the few people who said that the Trump meme coin was a mean reversion, right? And the reason for that is because, where is it? So I battle with Soul Maxis every day, all day in the chats. I hated Bitcoin Maxis. Then I became an ETH Maxi, I still love money, so I'm not an idiot. I own Solana, but the narrative that I've been telling people is right here, right? Basically, you had this is post FTX rebound. This is bullish consolidation of user adoption. This is right here is Trump mania,
Meme coin.
right?
Yeah.
That I called this a mean reversion, right? Because it just felt like the top for Solana, and it proved to be that case because every president from South America decided to come out with a meme coin afterwards and extract from the ecosystem. But the real story is right here is that we've just been mean reversing to this previous support now resistance on Sol ETH, right? And really where it started was right here. And why is this relevant? This is when Trump came into office.
Wow.
So when Trump came into office, he said, I'm going to be the crypto president, this, that, and the third, right? And what we've seen is that the SEC has taken probably the largest about face that we've ever seen historically in the world. They basically are just lifting all the restrictions. They're promoting full decentralization. They're saying meme coins aren't securities. They even dropped the case against Richard Hart. Soon enough we'll see Roger Ver, free my guy, out of prison. So it's just ridiculous. So since then, the market took this as a sign to say, well, ETH is very bullish because regulatory environments favor decentralized products, right? And decentralized builders build on ETH, zero downtime. I've been telling people that if what do you call it? What's it called? So if the stock market and the credit card, Swift, if the Swift system, right, which is the underpinnings for bank transfers, and the stock market just took 5%, 5% of their average daily flows and put it onto ETH, right? And or they put it onto Solana. The downtime that Solana has had since its infancy would have cost those networks hundreds of billions of dollars. And it's not a lot. It's like, I think it's 20 minutes I forget what it is. It's not a large number. It's not like a day or two. It's like hours. That's the total amount of time that Solana's been down. Total amount of time that ETH has been down, 0. 3 largest institutional protocols that have launched, they're all on ETH, right? ETH is better for vendor lock-in. You build at the L2, you can pivot to any other EVM or any chain for that matter. Pivoting, just look at all the protocols that are leaving ETH. Congratulations. Vendor lock-in is a big deal for big builders. It's very simple. I build my product, I get user adoption, I leave, right? No chain is exclusive to that. And I pushed Polygon over the years to create vendor lock-in when they were at tops. When they were at the top, no one wants to do it. It's fine. I don't care. Like, it's not my fight to fight, right? But the point is that no chain has an exclusivity on builders. They will all leave to go build their own chain, right? So there's no edge to that. So whoever has less friction on the vendor lock-in will be able to invite the better developers, especially at the institutional level. So if we're going into a pro regulatory crypto environment, right? Those builders and those companies are going to want to tap into where the users are at. They only have 2 options. They can go to Solana or they can go to Ethereum. Do you want to go to the degen casino, who would have cost Swift and the stock market hundreds of billions of dollars, or do you want to go to Ethereum, where they actually have a founder who's looking to actually scale the protocol? I call him Vitalik Bezos. This is new pivot, right? But do you want to go there, where we have the greatest thought leader of our time since Satoshi, right, who's building decentralized systems and realizes the dynamic flexibility that was needed in 2021 to make that pivot for the merge, right?
I was also add that post FTX, Solana doesn't have an exchange tied to it anymore.
No.
It's kind of wandering the wilderness now. All the major exchanges are supporting ETH or ETH L2s. Kraken just released their ETH L2. You have Base as well too. BNB is essentially like a ETH L2, if you want to call it that.
Yeah.
And none of these, the only one that maybe is the exception is Tron, but Tron has its own ecosystem, and it's outside the scope of like it's Tether's back channels for moving funds around, right? Um,
Yeah.
but it's not any place that anybody would go build. And so when I look at what these systems, these networks, I'm really focused on like where do the inflows come from, and where is it easiest to like get access to either stable coins or some type of point to get on chain. And every single one of those venues, all preferences ETH. And so like I don't see why we don't see, and essentially like all the major stable coins are launching on ETH as well too. I mean, I don't think we've seen like a Solana based, like solely specific Solana based meme coin
Mm.
that is or not meme coin, but stable coin. Just this past year we've had like Ondo and Usual and Anzin and like a host of other like ETH based stable coins launched on L2s. And we're not really seeing any of that in Solana. So like meme coin madness is over, and sure, they have some like retail adoption there. They make it super easy to like come in and like gamble and stuff. But that again, that's a very small market.
Yeah, I mean, just to get, devil's advocate for a second, I'm going to give Solana a little bit of flowers here. What they did extremely well during and after FTX is that they ran really amazing hackathons and community builder events
Yeah.
and really made a case for why Rust should be a superior language, right? And we won't touch on that specifically because I don't want to have that debate, Solidity versus Rust. But and also the user experience, right? Phantom really leads the way in user experience. It's the gateway to Solana. They've now made their wallet for Ethereum and Sui and all these other places as well. But it started there, and now we're just starting to see. And this is my whole point about how Ethereum decided to fight for users after the fact, right? We're now starting to see MetaMask or not just MetaMask, but Ethereum's pushing out an EIP that makes it so I don't have to do like 3 different clicks
Yeah.
anymore to approve and then do all the meanwhile I got Hayden in on CT arguing with why people should accept losing $250,000 on a Uniswap. It's just like it's just
Well,
bizarre.
I think that I saw someone say that it was money
It was
laundering.
I did, yeah. I saw the money laundering argument. It was also like a legacy portal that the guy had like 100%. So,
Slippage. Like
yeah,
it's very strange. Like very really like very strange. Who leaves 100% slippage on a trade coming
yeah,
to like, and it seems sophisticated as well too. Like he wasn't using the Uniswap front end. The slippage was set to 100, and
mhm.
like all of that went to like one like if you know that you're going to be in if you know that you can capture MEV from a block, it seems like an interesting way to money launder.
Yeah.
I'm like dubious. I don't think that it was done by accident.
No, I don't either. It's just the optics are very poor, right?
Yes.
But Solana did a really good job in terms of those specific aspects, and that's why they were able to survive and flourish to some degree. I don't think meme coin mania is over.
No.
And the reason why I say that, well, so I want to see. So we talked a little bit, I think, before the show around narratives,
Mhm.
right? And what is the narrative going to be? It's very clear to me what the number one narrative is going to be. So in the 2000s, around the time of the dot-com bubble, prior to that, everyone was going infra. Who was going to be the next TCIP or whatever, all this stuff. Infra is very expensive, especially when you're in an R&D phase, which most of those companies were, if not just
Mhm.
straight vaporware. Sounds very similar, doesn't it? And I think when we talk about the consumer tokenized everything economy, which I think is going to take about 5 years to get to like a full rendition of that, some of it will be shorter, some of it will be later. I think in that regard, things have to get cheaper. So not only do we not have cheap liquidity right now, but people are still trying to raise on vows that are just like infra level vows for products that make no sense.
Mhm.
And the problem is that they're raising for token when in reality they're an equity product.
Right.
So the way the market works right now is I have an equity product. If it gets adoption, like a pump fund or something like that, then I either choose to keep the revenue or I launch a token. But if you're launching a token, it should only come after adoption, because otherwise there's just no narrative to really carry your price action, and you're just in kind of a prisoner's dilemma with the investors who have liquid tokens coming onto the books, right? So, unless you're in some sort of high speculative area, like let's say Aether with AI or something like that, you're just not going to have that great a price support. So most people are just like, well, just wait until you have scale, right?
Yeah.
Basically, if you haven't done a Series A yet by a reputable fund, don't launch a token. That's like what that, and that's not even saying that's like the gold standard, but like that could be a really good like way of just saying like I'm not investing into this. So like a lot of people have just basically, if you're investing right now, you're saying, okay, I'm going to go with a very hungry founder who's super early and they realize they can't get money, so I'm going to like try and get a good deal, or I'm going to go super late and just try and ride this up, you know, because I think it's going to go to 20 billion over the next 3 years. My money's safe, and I can get some passive yield off my vested tokens. Everything in between is like a crapshoot, because your chances of breaking out are very high, right? So what I think the big narrative of the future is going to be is, like I said, the consumer and tokenized everything economy. But we have to ask ourselves, how does it get cheap? So you probably heard the saying, like I think the guys on the All In podcast talk about this. The first, it was like the first billion dollar company is going to be created with just one person in the next year or two, right? And why that is because with AI, you'll just be able to do everything. You'll be able to build whatever you want. Cursor's making great gains, like stuff like that, right? So because of that, cost of building goes way down, and we're heading into a consumer protocol economy, more consumer. So therefore, that cost goes way down. We're talking Web 2 with Web 3 Rails. We're talking, new IDs and imports that allow that process to not only be consumer friendly but just way cheaper in terms of integration. So basically, like, our developers of the past are going to be replaced by developers / prompters of the future. So I may only need like one person who can do it all. He's the CTO, he's the prompter, he's the developer, all in one, and he's letting Cursor or whatever do the work for him, right? So instead of us, taking 3 to 6 months to go to market, I could probably go to market in like 30 days, right? So this is the future that we're going to be seeing over the next, days, months, years, and because of that, everything just gets infinitely cheaper. Go like your biggest spend will probably be on marketing, which, by the way, you're going to have hundreds of thousands, if not millions, of autonomous chatbots who are going to be, doing swarms and spamming. I don't know if we talked about the human dark forest reverse Turing test on our last podcast, but it's only gotten more dystopian since then. So, even marketing may even be infinitely cheap because you'll just be able to autonomously launch, your own organic users across CT, who Elon Musk is more than happy for you to pay him for the API usage, right? So, we're gonna have to go into the forest and reanalyze what life is, but for the founder, the next 5 years are very bright because things are just infinitely cheaper. So I expect founders to only raise a small amount of money from angel capital, which is very similar to what you see in traditional equity today. Everyone starts with these kind of like really early equity angel rounds on Angel List or from these different angels or whatever. They use that capital to spin up, and then they delay the self gratification and they do a big round. And I think that is what is going to change things, because what the meme market has really represented is, here is us just speculating on things, because it wasn't just memes, it was like AI, chat agents, whatever. But really what it was like, where's the attention? I'm cheap. I'm starting at 70,000 market cap. I have very thin liquidity. I can get pumped up really easily. I'm cheap. I'm in this sector. What is this sector worth? I'm worth a fraction of it, right? And it's always been about the numbers. Who's worth 1% of the market share? Who's worth 0.1% of the market share? Well, if I'm an AI meme, right? And I'm on the early side of the saturation curve of whatever, the next big trend is. Like there was an AI meme. I don't think they ever did anything called Trisig or whatever. Not to, I'm sure they did something, but they were mainly like, here's our vision. That's not to say like a lot of great companies don't come from an idea, right? But you're talking about someone who launched a token before product scale, right? So why would I launch a token before product scale? Market momentum's in my favor, high speculation focus on what I'm looking at, right? And I'm willing to capture the float, put it out there, and then get back capital for it without having to go raise money because no one's putting money into an idea right now,
Yeah.
right? Ideas are cheap. I can go on ChatGPT and give you ideas if you want to go invest into them, you know.
Yeah, I think this is like what we've been seeing. I mean, I brought up Moonshot from last year, and I mean, they didn't build any crypto infrastructure, right?
Mhm.
All they did was made a great app with like easy USD rails into the system. They abstracted all the wallets away. It doesn't even feel like you're using a crypto app. You're just gambling on like some meme coin ticker, right? You, it's really hard to withdraw or do anything like crypto native inside the app on design. And you look at other companies which have just been minting, Uniswap Labs with their front end as well too. So I think that, you know, the infrastructure, the hard part probably has been done at this point, right? Like we've built a lot of
Mhm.
infrastructure. We now have the assets. We have the liquidity pools that people can swap between. It's extremely cheap to use all these things.
Mhm.
Like stablecoin swap fees are now down to like 0.01%, right? Um, and it's just it's amazing that any builder now, and especially with, like you said, with these AI assisted tools, can come in and just like uh, import Privy and a bunch of other
Mhm.
like packages, and just like spin up a crypto app on the weekend, right? Um,
Yeah.
and they can
Well,
do it.
they're very so the other thing that changed post .com bubble, during the .com bubble and probably in the early 2000s, the common methodology that was used by developers was waterfall methodology.
Mm,
And then around like 2008 to 2012, agile methodology came along. And in agile methodology, it's very user business developer focused. So it's all about, finding issues with the business development flow as early as possible, or bugs as well. It's short iterations, getting value out to the consumer, being very user focused. While waterfall, you don't get that feedback until after you go through like a 3 to 6 month, waterfall sprint or whatever, and then you're not getting the feedback for 3 to 6 months. It just wasn't feasible in the application era. Because remember, we went into SaaS and then we went into apps on mobile, right? And now we're going into whatever the hell we're going into now,
right.
2.5 D apps, whatever. So, that's the other thing, is that we're able to spend less time on development, less resources on development, and more time on the user psychographic. And if you kind of drive your investment philosophy on user psychographics, you would have been way ahead of where things were in 2024 and 2023, because you would have known that users didn't like using Ethereum. They wanted to go to Solana. You would have known that they don't like the cheat fees. Where are they going to go? Solana. You would have known that they're looking for liquidity. It would have been on Solana, and so on and so on. And pump fund as well. Like, people were getting rugged. Okay, great. Like, here's a launch pad that anyone can just like launch their own token in a gamified way. Like, you know, and the gamification just generally is another user side. So it's like we're getting to a point where it's like we need to start caring about users more, and
Right.
that has many multiple applications, right?
Um, so we've kind of like talked about the three majors, but like, what about everything down the rest of the curve? I mean,
Mhm.
you mentioned in the beginning, and I think everybody knows that like most alts are either down like 60% or 90, and then like another 90. Um,
Mhm.
there's really been a lot of like suffering in the riskier part of the markets, now that Bitcoin's like completely decoupled from kind of crypto valuations, and ETH has just been like suffering over these past months, and Solana doesn't really have that like expressive like app community outside of the meme coins. So like what's happening in alt land going forward, 2025 and beyond?
Yeah. So chains don't matter. That's the takeaway here, right? Um, everything will be L2 to some degree, or consumer builder friendly.
Modularized, right? Like
Yeah, it's very modularized, etc. So basically all these chains are driven by killer apps. Arbitrum was driven by GMX. When you have a killer app or a killer protocol that comes out, and generates a bunch of money for the chain and brings on a bunch of users for the chain, that then spills over into other products, and it's typically trading, lending, and borrowing, right?
right.
Or whatever. So, that's fairly solved. We know where we see money go, and sometimes there's unique products like Convex and stuff like that, but or Pendle or whatever. But at the end of the day, like they're all the same animal with different clothing, right? But it all comes down to killer apps, or killer protocols. Like Pump Fund is the killer app or killer protocol for Solana. GMX was the killer app or killer protocol for Arbitrum.
Hyperliquid.
Hyperliquid as well. On ETH, it's Ondu and all the other. Yeah, so it's that's what it'll continue to be. And I think I had a really amazing conversation. It was last year at some point with someone from CoinFund, right? And I was pitching them on a portfolio company of ours called at the time they were called the Colony. Now they're called Be Easy. And Be Easy essentially does like on-chain collectibles for trading, and they warehouse the actual assets with Brink Security, who's like a $4 billion security company. And they have a process that they have specifically in Web3, which they're like an innovator in this, where basically you can have your product stored there, ship it there, it comes in, it gets minted to the blockchain. If you want to like decommission that token, you can then burn it, and then it goes. But it comes back to you or whoever the holder is. There's like a trail of ownership. There's all this like cool stuff, and then you can like get yield on your assets. And they handle like PSA Pokemon cards and all sorts of stuff. So they have the means of protecting. Like it's probably safer there than it is with you, right? Because they're storing it in a professional manner in this system. And then what that allows is the tokenized everything economy to take over, where you're able to get yield and stuff like that. I was speaking to CoinFund about them because at the time they were on blast. And I was like, yeah, I just feel like I don't want to go too deep into it, but my feelings about some of the guys over at Blast. I just felt that they were not doing what was right for builders. Pac-Man's perspective at that time was very much he wanted to be very hands off. And I was good friends with the guy who was heading up BD at the time there, and like it was just like pulling teeth trying to get them to do anything for the builders on there. And I think that was really their undoing. They failed to be able to create a killer app. And we're an investor in Thruster, by the way. They're the leading DEX over there. We co-invested with Pantera. It's not doing well. I think they're down like 80 or 90%, like most stuff in the market is, but they were down way before the market turned over. So, Blast has been a failed experiment, and I think it started with the fact that the team did not want to be hands-on with them. So where are they now? Well, they're over on Flow blockchain, right? And people are like, what the hell is Flow? But they're going through their early pain points on Flow. Like I was told by one of my partners, like the user experience on Flow was pretty poor, but the team tells us that they're fixing that, which I think it's very fixable, right?
Yeah.
Early growing pains. But the founder over there at Flow, I forget what his name is. He was an angel investor in the recent round with Be Easy. He's very much of the opinion of like, I'm going to find these amazing founders who are building these amazing products, and they're looking for funding because it's very tough for funding right now, and I'm going to put my capital behind them, and I'm just going to try and get a small group of hungry founders who are going to try and build up the next app. dude, their month over month
Oh, yeah.
on GMV is crazy right now, right? So and there's like no one over there. So like that's the whole point. And the guy from CoinFund told me, he was like, we don't really care what chain you are because most EVMs don't have vendor lock in. And you can pivot wherever. It's not working here, pivot there. Because I was like, well, why don't you go to Abstract, right? I think Abstract's more on brand for you at the time. And they were like, well, Abstract wasn't ready for us, which
Yeah.
is just how it is, you know? So I actually don't think it matters where people are building. I think it matters what people are building. And this is really the paradigm shift that we're heading into in 2025 and beyond. It's like, you know, I remember when I first used BSC, right? I was like, yeah, this is annoying. I don't want to deal with this, right? I ended up losing a bunch of money because I wasn't early, right? Never made that mistake again. Anyone in crypto who's like serious about crypto at this point knows how to go between different EVMs. You know, the social cycle is so fast now that if something like is kicking up, someone's going to have a guide for you of how to figure it out, and we're all used to it by now. So I don't think this like user friction, and I think this will even get less and less and less over time. You know, it already is. I think this user friction just goes away. So I actually don't think it matters where you're building, unless where you're building has user friction.
Right.
You know, so yeah, and that was what CoinFund told us. They were like, yeah, we're just basically investing in founders. Like we're not trying to. We don't give a shit if you're building on Polygon, if you're building here, if you're building there, because at the end of the day, you can just leave. You know, these founders are not obliged to stay. Like no one's forcing vendor lock-in, really. You may have a situation where, okay, this guy invested, so they're asking for like 2 years or whatever. But at the end of the day, like if you have growth going on, people will invest into you, and that's just how it is. And they'll want equity too, because like, why do I just want tokens? You know, you're building a revenue-based business. If you're going to get acquired or IPO, you know, no, apparently the SEC doesn't care anymore. So if you can IPO and have a token. Michael Saylor, you know, to Eat's credit, said he's going to tokenize MicroStrategies. Like what world are we living in now at this point, right?
Yeah.
So yeah, it just doesn't matter where you're building. So that's why, like for me, if you wanna look on what you should buy down the pike, you should be buying things that can turn into killer apps. And then if you start to see the growth, buy it. So like great asymmetric bet in 2024 was Aerodrome on Base. Why
Mhm.
were they such a good bet? Uniswap had over 50% of the market share over on Base at the time, right? But when I spoke with the team, because I had a project that was going on to Base, it was very early days, like Q1. They were like a $7 million market cap at this time, right? And so I got in a hold of this guy, and he's like, yeah, like we're basically running all the grants for Optimism and Base,
Mm.
and we're the ones who are creating the exotic yield products for this. And I was just concerned about getting, you know, one of our portcos support from them. So I wasn't thinking like, oh, I should go buy the Aerodrome thing, right? I turn around at the end of the year, it's $1.5 billion,
Yeah. It's
right?
wild.
You know, they're providing value for people at the end of the day. It's,
Yeah.
you know, and they can convert. Like what's my need? I need to get portfolio companies support from the Grant Foundation and from getting and yield products that expand awareness to them.
But
Who's
you think
providing it? Them.
but
You
you've
know.
seen this with a couple of other projects that like were Arbitrum based, and
Hmm.
have since expanded. So Dolomite is a great example, where they had been on Arbitrum for like a long time and had built a great product, had been able to really get battle tested over there,
Yeah.
and then have been just extremely lucky to kind of be a part of Bearchain and become the number one app on Bearchain at the moment
Yeah.
through Boyko. And similarly, the Silo team, which is now the number one app on Sonic, as well. Again, like had deployed to Arbitrum, had been there for
Hmm.
a long time inside the Arbitrum ecosystem, and now like when there's kind of like greenfields, like the best time to deploy like an app or protocol is always when the chain launches, right?
Yeah.
Yeah, that's what Aerodrome did.
The incentive mechanism to farm, and that's been another big thing for 2024. It's just, you know, you're talking about high beta safe activities. It's farming, though a lot of farms have gotten wrecked. um yeah, it's go where you're treated best, right?
Mhm.
And understand your needs. So like the lesson from Colony was like, okay, well, who's gonna continue the runway and structure things in a certain way. Like Flow, the guy from Flow has a lot of connections in the collectibles and RWA
They
space.
have like NBA, they have NFL,
Exactly.
Disney, like really like
Exactly.
brand it's like brand positive over there. Like
Yeah.
if I was a big brand, like I'd probably look at them just because they've built this nice little walled garden, which is nice and safe and
Yeah.
doesn't have all the issues that like ETH has or Solana has. And you can come and build like a really consumer focused app because like all their apps over there look great, beautiful design.
Yeah.
They spend a ton of money to make sure that it's like super retail consumer focused, like any other app that you would find online. And it's not some like janky UI,
Hmm.
UX, poorly designed. Like we're doing this for people who want to suffer at the end of the day, which is most
But
of it.
that's the, but
Yeah,
and that's kind of where things are breaking, right? That's where things are compartmentalizing, right? You have the consumer apps going to places like that.
yeah,
I actually think Polygon's just like losing the war. It's like really crazy. They still manage to survive, but I just do not like. Maybe this is a reflection of their downsizing that they had. I just don't like their BD decisions.
mm,
It's just maybe they're turning the corner right now, and I like to give everyone the benefit of the doubt. Like you change over time and you have different opinions. Just go ask Mark Zuckerberg, But it's like I just don't get it over there. I feel like they're hemorrhaging out to fresh ideas and fresh people. Um, it's not good.
yeah. I think they can all be turned around. Plus, they have like a killer app which everybody likes, which is Polymarket. So like,
Yeah.
they have some entrenchment and they have some wiggle room to kind of like try and fix things. Um, I like we talk about all these things, and it sounds like we're all positive about uh, like early stage growth. But if you look at the numbers, it's pretty abysmal. Like we're back below 2018 funding levels, and we've yet to even kind of like get 50% of what the funding rates in 2022 were. And
Mhm.
at the time, like sure, SBF was like laundering customer funds into projects at scale. And so he was providing billions of dollars into like the VC pipeline at the time. And so now that he's rotting in jail somewhere, that's all dried up. But like, why haven't like VCs and other allocators come back in size for funding?
Well, the first thing is the risk asset portion with the Fed, right? And people have basically been piling into T-bills because it's better to hold dollars and get yield on it than it is to try and risk it in a very like risky market setting. That's number one. Number two, a lot of capital got wiped out from the ecosystem with FTX, so there's still a number of long tail funds that are waiting for their bags to mature, including Pantera and others. You know, if you invested in like 2022, 2023, where you offloaded a lot of capital at the top of the market, right, and you were just trying to get into the market any which way, then you're probably waiting for those bags to mature, and you're probably telling those founders not to go to market until the product scales, right? So I think that's part of the liquidity crunch. But then we look outside of it, right? The liquidity crunch is existing outside of crypto as well.
Well, but
And
before we get outside of crypto, like just on the
yeah,
valuation side, have valuations compressed to the point where like there's attractive uh, investment opportunities anymore?
the the problem, and this is going to be the other point, right? Is that maybe the reason we're not seeing funding anymore is because it's better not to raise,
Mm,
right? It's better to build and get what you can and not report. Like no one's reporting 200K angel rounds, 1 million angel round. Maybe they are, but it doesn't stack on itself. So like
right.
VCs are taking like more concentrated bets at the top. A lot of the funds that did well, they don't invest downstream. So now all the raises are like 3 to 10 million, 5 to 10 million, right? So like if you're doing a real raise, it's a big raise. It's a low risk raise where there's a lot of that where they can pump it up and showcase it or whatever. I've always been like down Val type of guy personally, but the problem is like when you look at the middle and the bottom of the market, The middle of the market is guys who have some success but have no idea how to scale, and there's no cheap middle money anymore.
Mm,
They've all gotten wrecked one way or the other. That extraction from the ecosystem has just been deployed or depleted. And then the downside of the market, like the angel market or whatever, you either just don't hear from them, or like, you know, I think it's you don't hear from them. So it's a very small market, and a lot of founders, like, they want to justify 15 million, right? 10 million, 15 million, 20. When in reality, you should be like 2, 3, 5. Like, we're talking equity products that aren't giving equity, that are trying to tokenize. Like, if you're a real product, you're probably some big infra, or you're probably some big protocol. You probably need an assload of money to get to where you're at. You focused on scale, got there, now you're just doing a big raise. And
mhm.
like, that's a very limited set of companies who can do that. Movement was a big raise that happened over the last year or so. Um, like, that makes a lot of sense. Like, just go to crypto rank and see what's raising the big dollars. Like, it's
Yeah,
very concentrated. It's very low risk.
yeah.
It's very Series A, pre-IPO type of,
Well,
type
Binance
of, you
Binance
know,
just raised $2 billion this week.
their Binance. It's concentrated, low risk, right? It's what is the risk of being investing 2 billion in the Binance? Like,
Also,
you're
they're coming to like the Middle East where the money's being
yeah.
raised as well too.
Well, Abu Dhabi is on the forefront of technological innovation when it comes to that. I think the U.S. is going to silo value out of those regions.
Mm,
Those regions are basically nation states: Singapore, Abu Dhabi, Dubai. They're basically nation states that allow for, cheap cat. They allow for these founders a place to live where they're not getting oppressed. But now in the U.S., like, everything's getting cheaper. We're going to go into a cheap money economy. Dollars lowering, and the regulatory doors are just opening. So, not being in the U.S. is a mistake now,
right.
for at least for the next 4 years. And I don't see how they ever reversed the damage from that. They basically have opened up the floodgates. You
Yeah.
can't put it back in the box. So
Yeah, it's
yeah.
interesting how you talk about the hollowing out of the middle. The analogy that I think of is just how the movie industry has evolved over the past like 30 years to also hollowed out the middle. Like, you don't really see like $20 million like mid-market
Mhm.
like rom-coms or like other movies anymore. It's kind of like low budget. We're doing this independently, or we have these like giant 200, $300 million uh, budgets set aside for like something that is conservative and low risk, like a superhero movie. And
Mhm.
I guess it does make sense. Like, if you're a founder who is like done a previous raise and you need another like 10 to $20 million cash injection, but you haven't found scale yet, like it's pretty risky. Like, what, like, especially when there's more kind of like guaranteed things at the top of the curve, which might provide uh, like less risk.
All the good ones are doing bridge and down rounds. That tells you everything you need to
Mm,
know. You
wow.
know.
Yeah.
Yeah. I don't want to name any companies
No,
because,
no, no, it's okay.
yeah, I have some I could that you'd be like, oh yeah, that makes sense. But yeah, they're all doing bridge and down rounds, unless they're like the hot new thing. And like, to your point, like, I think you were talking earlier, you were like, oh, I don't really see the concentration of narratives. I think people can't see past the trees
Mm,
is the problem. Like, for me, I'll give you my top five, right? Let's do a top five, right? AI single builders. So we're talking like people who are using AI as a single build.
mhm,
Institutional products will expand at a very high rate due to regulatory easing. AVS and restaking will be very
mm,
important because of ETH's re-rise to dominance, in my opinion. Meme coins won't die; they'll just evolve. And then consumer applications, right? Tokenized everything economy. So that's my top five. And when you put it into that perspective, we're in a long game now. It's no longer like, what's the next bubble. And that's not to by the way, it's not to not say you're not going to have, Bera season or Degen Sonic season, or whatever. Like, but I just think that those are just small demographics, you know.
right.
And I think all the things I just listed are massive demographics, massive, massive, massive demographics. The tokenized everything economy is insane. Might be you know the biggest thing we've ever seen. The AI stuff is going to be huge. In fact, I believe and I said this to someone in the chat, and I really believe this. They were like, "Oh, this is the top," and I was like, "No, it's not the top because an AI hasn't rugged me yet, right? That's the top because what are AIs going to be able to use for financial transferring of financial assets and capital? Is an AI going to walk into a bank and create a bank account and have access to a SWIFT system to transfer money between companies? Absolutely not.
No.
Not at least anytime soon. Maybe a decade or two from now. Maybe you trust AI enough to do that. But so I think Mark Andreessen's already been pushing for giving AI access to their own wallets and doing their own things. AI cares about resources and they care about going outwards. Humans are very internalistic beings. They care about inward thinking. They care about things like emotions and ego and things that AI don't have issues with. So, you need to give AI the creative freedom to do what it wants and not restrict it like a child. But at the same time, teaching it how to be responsible. And I think that starts with being able to transact openly in social forums and on financial rails. So I actually think that at some point, the real saturation at the startup level is that AIs will just be starting up their own companies. Like we're heading towards single builders who then, when that happens, you'll have me on your podcast again next year, and I'll tell you that we're heading towards AI builders.
Right. Yeah.
And that's the future. And that's why this is the other great thing. Humans will no longer have um, they'll no longer have like high needs. Like all their needs will be met. Their hierarchy of needs will be met. So we'll then be transitioning to what I refer to as the Enlightenment period, right? And that Enlightenment period will focus on self-reflection and creativity. We'll all be content creators. We'll all be creating things that are unique to the human experience that other humans want to consume. And that will also be what happens in the startup market, because I'm not going to let AI define the human experience. It's just not human. It's
Right.
human. It's human like, right?
Yeah. It's interesting how like all the major kind of like Gen Z influencers, kids nowadays, like I'm old now. I'm almost 40. So like
Mm,
I was not a part of this, but they all are like focused on like live video because I think it's the only thing that's not going to like suffer against AI in the future. It's like
mm,
you can prove you're somewhere and it's much more difficult to like fake something. I'm sure the AI gets to the point where it can like recreate like outdoor scenes and like make videos in like 4K as if there was an AI influencer like standing in Times Square in New York City. But like
mm,
if you watch these kids like when they go out there, they like draw crowds, right? They're like it's like a uh, in the moment performance that is broadcasted to millions of people around the world, and they like visit different countries and they have these big fan bases, and there's almost like no difference between being a celebrity and being like an influencer nowadays.
no.
And that probably just converges more and more as we get better ways to like stream out your life. And if you assume that like the thing that you mentioned earlier about the like proliferation of like AI bots in text-based spaces, like you can probably already say that like you don't know who is an AI on Twitter anymore. Like it's very difficult at this
Mm,
point. And so like if Elon's going to have to figure something out about how to prove that somebody's human. I mean, maybe it's implementation of like WorldCoin and like scanning people's eyeballs.
I
But
was gonna say WorldCoin. Uh, I had told my friend who used to work at Lido. I said WorldCoin is it could be the greatest invention of all time, just not practically,
yeah,
right? Because Sam Altman, basically said we're going to have to create the reverse Turing test. The problem is you're using a biometric that AI can probably just take from you anyway. Like how does the State Department or the government track people through intelligence? Like you're walking look at China, right? You're walking down the street, they're basically taking video surveillance of you, and the AI is taking data points from you. Well, they're reading your eyeballs.
Right.
So your eyeballs aren't really a great, biometric marker to use for the reverse Turing test, because you can just create fake irises, right? So, practically WorldCoin was terrible, but conceptually WorldCoin was way ahead of its time. And that's,
It's cheap.
granted,
It's the cheapest way to prove humanity, right?
yeah. Yeah, I think it right now, because we don't have AI robots that can like be human that well, and they're not out in population at a saturated rate. I think the best way to do a reverse Turing test is just going outside, you
Yeah.
know. And that's why you're talking about the influencers who are going, they're live because they have a social graph of people who are verifying that person's there while he's moving around his phone, or they are moving around their phone. Other people are also documenting them. AI can't fake that yet.
Yeah. Yeah.
Yeah,
Yeah.
yeah.
But like, even if it could, like, if you're showing somebody in real life somewhere at a spot which can be located and visited, like, there's no way to prove that, or like, there is a way to prove that person is there, and that, if you put,
Today,
yeah,
well, look, you know what may happen, right? Uh, AI may create a video of a nuke hitting New York City,
right,
right? And then having 100 AI other accounts that are creating angles of the nuke going off from New Jersey or other parts of the city.
yeah,
Or people going like, "Oh, I'm in a bunker right now, the nuke's hit," or whatever. So that could be a form of propaganda from nation states who are able to facilitate that level of, especially with quantum computers and stuff like that. The level of resources that takes just gets cheaper and cheaper.
yeah. Yeah, I mean, with I think I wouldn't be so worried about nukes. Like, after watching several years of the Ukraine conflict, now it's like drones.
Yeah,
Um,
yeah, drone swarms.
Scare the shit
Yeah.
out of me. Like, just like drones with bombs, like, on kamikaze missions, and you can make millions of drones. Like, they're cheap, and the cost is going to keep going down and down. And you throw like a pound of explosives on there, like, that's enough to kill somebody. Like, there's
Yeah.
it's the convergence of like drone tech uh, and AI and just like war fighting is going to rapidly change. I mean, it already has, if you look at like what's been happening in Ukraine. But like, this is I think where the biggest shakeup in the United States comes, is like, so much of our budget comes from like defense spending, but it's allocated to these like big old slow systems, like aircraft carriers, where like they're really susceptible to like low cost drone tech that can just put a hole in them and take them out of action. This is why we've kind of like lost the plot in the Red Sea, and the Houthis have been able to like assert some dominance there, just because of the difference in pricing between the United States and these like small drones that they have. They can launch thousands,
Mhm.
like hundreds of them, at like 10, 20K a pop. And our aircraft carriers and our ships, which cost like hundreds of millions of dollars, billions of dollars, cannot sustain like multiple hits of these. So yes, there's going to be the similar.
There's some historical precedents there, right? Like, it's always been the plight of the traveler to get to the location, right?
Yeah,
Look at Vietnam. Look at America with the militias during the British colonial period, right? The benefit always goes to the home team, so to speak. Even though they're probably still going to die at a higher at a
yeah,
higher rate. Like, if you look at all these instances, like, we killed way more people, but the resolve of the people made it so that you weren't taking anything.
yeah,
Depending on the situation. So yeah, I feel like being at home and being cheap and mobile has always been the historical reference. It's just war changes each time, and doesn't always play out like that. Like, I think in Ukraine, like, look, that's a classic example that they basically have, like, they have to kill 6 to 1
well, they've gone back to
to.
World War I and trench warfare.
Yeah.
Right. Um,
Well,
But
they had snipers in trees. Like my grandfather's father died from being gassed in World War I, and he lived until World War II and died from complications of it. But he like the story was like, oh, he was walking as in a patrol in the woods, and then basically a sniper who was on a tree basically just gassed him, and
mm,
that's just like a single guy sitting out there. You know what I mean? So it's always like these weird, like you think about the trench warfares, but it's always about these weird scenarios where people are just using less resources to kill more people.
yeah.
You know?
Um, I wanted to come back to your number two, which is like the institutional introduction into crypto. I think the clearest example of that is the growth of stable coins. I mean, we looked at the chart at the beginning of the podcast, and I think we've been breaking all-time highs over and over and over again. We're seeing some very successful new stablecoin projects come out with like Ondo and Usual. And it looks to be that we're going to get like very good regulations coming out of the United States, which I think is the biggest catalyst for
Mhm.
2025. We get either the Genius Act or the Stable Act. Like one of them is coming, right? There's no way that we don't get some sort of like stablecoin bill in 2025. At least that's what I believe on my radar. And once that comes, it's like the floodgates are open, right? Banks, the OCC just took off all their, or just put out a new interpretive letter. Banks can now hold stable coins on their balance sheet. The SAB 121 is gone. So like crypto assets, which stable coins are, don't have to have like $1 of liabilities or $1 of assets to counteract them. And it looks to be that like the tokenized dollar is set for the largest period of growth coming into the later half of this decade, and that by the end of like 2030, we're going to be looking at like trillions and trillions and trillions of dollars on chain that's been tokenized.
Yeah, I mean this is part five and part two. It's tokenize everything, right? But more specifically, like the dollar.
Dollar, yeah.
The Trump administration came out and basically said that, and this is why I think Trump is buying ETH. He basically came out and said, we want to use blockchain to expand the dollar's global hegemony,
Right.
right? And that's their goal. And yeah, I think the Fed came out the same thing. They said banks can operate and transact in crypto. They rescinded the IRS broker rules.
Mhm.
You know, this, that, and the third. So I actually truly believe that there will be stock market products. I don't know how big this is going to become and how quickly. I think
Well,
it could be very big.
Vlad. Look at Vlad over at Robinhood, who's like, he wants
Yeah.
he wants to take his whole business on chain. Like they're integrating crypto at like a really deep level, and I think that he's a big believer in like the tokenize everything camp.
It's faster, it's cheaper. Like we talk about lowering user friction all the time.
Right.
These algorithms for liquidity are more efficient, right?
Because look at the go back to GameStop, right?
Mhm.
It was 2 years ago now. That whole issue was around like GameStop and the problems that they were having, specifically at Robinhood, was all around settlement, and that
Yeah,
they just couldn't get enough shares at the time to meet the needs of the people who were buying them. It was wild stuff.
yeah,
So
yeah, 100%.
yeah. But I think like, we're about $300 billion worth. I think $300 billion. It's still like a drop in the pond for stable coins. Like we really haven't had that like exponential uh, uh, like growth in terms of the market, right? Like I think that like before the end of 2030, we're gonna have a year where we like 5x the supply of stable coins, like within a
Well,
single year. And
so this cycle, right? And people are like think I'm crazy, but I believe each price target for this cycle is between $15,000 and $40,000.
oh wow, okay.
Yeah, like straight face, right?
Believe
And yeah, I think that this plays into it. So when I say this cycle, I'm talking about by 2028, right? And maybe 2030, but 2028. I think all the majors can do 10x
Mm,
from here. And yeah, I think that a large part of that is exactly what you said. Like when you look at on chain today, it's a very 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 small fraction of what it could be. And I believe that Ethereum is the primary benefactor for that.
Right. But what's interesting is like when I look at DeFi, there's probably only two projects that, like, if I was going to my non-crypto friends to like tell them to put money into, there's really only like one 100% and maybe like two, maybe at like an 80% level. And the first one being Aave. I'm pretty sure I could recommend that to my grandma and be like, hey, like Aave's like pretty much equal to the 60th largest bank in the world. They're going to
Yeah.
be a huge beneficiary of all these stable coins coming into the market. They're just going to grow and grow and grow. Like, I think if you put money into Aave and you're looking at like a 5 to 10 year period, it's probably going to do pretty well.
Yeah.
And then after that, like, I don't know, like it's really, really, really hard for me to like look at any other product in the DeFi ecosystem, unfortunately, and say like, this is a surefire bet that I can say in a 5 to 10 year period, like my grandma's not going to be losing money, or just rest her soul, but like my father is not going to be losing money and calling me and being like, oh, hey, Sam, like, are we winning?
Chain link, right?
But Chainlink's been compressed. Like there's been so many new entrants into their market that they previously had a monopoly on.
But they're the gold standard for institutional Oracle solutions, right? So that's like saying that SQL is competing against other database providers. Like there's still SQL,
Yeah.
I just don't. Or like Microsoft is competing against other. It's like when you build when you want to build institutional rails for data sharing on chain, there's only one provider, right? I don't think there's anyone else competing with them. So, like if the New York Stock Exchange, not to say they wouldn't build it themselves, but let's say the New York Stock Exchange wanted a developer partner to help them build an Oracle system, who would they go to?
Chainlink, probably.
Chainlink, 100%. Like any institutional product would, because it's tried and tested. There's countless examples of them already doing it. They're like the IBM for oracles. It just is what it is. There's no second best, as Michael Saylor would say. I think makers would stood the test of time, and I think they'll continue to grow as long as capital grows. It's the same concept of Aave, and I actually think Maker has embraced. They've embraced RWAs more, which is great, and they have a specific mechanism within their token system that has a supply and demand mechanics, and
right.
That's been ETH's downfall recently, is that it doesn't have a supply and demand mechanics, and that's changing. It changes with the blob market expansion. It changes with more deflationary pressure from removing ETH. But we haven't had a supply demand mechanic since ETH was used for ICOs, really.
Yeah. But I don't think, I look at Maker and I think they've lost a bit of their moat. I think that another competitor in the kind of like decentralized stablecoin space could make a big impact and unseat them at some point in the next 5 to 10 years. I don't think anybody's going to unseat Aave. I think Aave has like a very clear and pristine moat, and that if there is no other lending market that can compete with them in any terms or functionality or security or safety at this point. And I can't say that with Maker. Like, could we be looking at like Usual or Ondo like eclipsing them in the next 5 years? Sure. I don't, like, why not? They have a lot of first mover advantage at Maker, but they've definitely lost a step over the past couple of years to other competitors, and to regain that, I think that Rune and the team are great builders, and they have a very nice ecosystem over there. But that's why I was saying, like, there's really only one bet that I can make. Outside of that, it's very difficult for me to say. I get, maybe Pendle, but like Pendle's quite esoteric, and like I don't know. There's nothing really, and that's a good and a bad thing, I guess, is that there's still like a lot of shuffling of the cards that's going to happen in the next couple of years, and it's going to present a lot of opportunities for like competitor projects to take out incumbents. I don't know, maybe Curve, because it just has like so much like buy-in and the like liquidity lockups, but that's it's quite esoteric. But it would be.
I feel like when ST ETH happened, Curve hasn't recovered.
I think that Curve just didn't aggressively pursue a cross-chain strategy to the extent of, they kind of got like behind the curve in the L2 wars and saying like, oh, we're going to focus on ETH where all of our TVL is, it's expensive and we kind of have to like pick winners, especially coming out of that early like 21, 22, 23. Like, how are you supposed to pick that like arbitrary, that Polygon's not the place to be, but Arbitrum kind of is, or like that base.
It's interesting because we invested in Cross Curve, right?
Mhm.
And that was backed by the founder of Curve.
Yeah.
And they backed like 3 bridging providers because they realize that that's where they have to be,
Right.
is on the cross chain side.
Yeah. So I don't know. I mean, I think it's like, it's really hard as an app to like have these expansion things. Like I've talked to many app builders or like protocol builders, and like it costs a ton of money. And if it doesn't work out, then it's a huge sunk cost that you've put all this time and effort into to like deploy to these chains, to provide incentives. And like, what if it doesn't work? What if in 6 months, 10 months down the road, it turns into another blast and it's just, it doesn't provide the return that you needed. Yeah. So I don't know. I mean, I think that like, this is the kind of like come to Jesus moment. This is probably why all the tokens are down 80 to 90% across the board in DeFi and everything.
Yeah.
It's just like the consumers really haven't come into the sizing that people thought they were going to. And additionally, the apps have kind of reached their addressable market at this moment. And with the ability to just either fork code or like spin up a new L2 or go where the incentives are, it's really hard to like stay at the forefront. Maybe this is why like Avi's done so well, is because like they've been really selective in where they expand, and their biggest market has always been and will continue to be ETH, and that's where they derive most of their revenues from.
Yeah.
And so maybe it's just like bullish ETH first. Like DeFi, right? And
Yeah.
Maker would be a part of that, obviously. Curve would be a part of that. Curve Convex. I don't know. Pendle, I guess. But outside of that, it's hard to say.
Yeah. Yeah, I think Maker has one of the best charts that I've seen in the suppressed ETH ecosystem.
Yeah.
I don't have it up right now, but I was looking at it the other day. It was pretty good.
Well, let's wrap it up there. It's almost been 2 hours that we've been going on. I think we've kind of covered everything, but it's been pretty informative to kind of like sit down and go through everything. You always kind of have everything on point, don't you, Matt? And
I like to hope so, but you never, you can't. You always have to expect the unexpected. But I definitely appreciate you letting me come back on here. It's always a pleasure when we get to re-engage and talk about all this macro stuff. So I definitely appreciate it.
Yeah. And everybody else at home, you can follow Matt. You actually changed your Twitter handle recently. It's like Zeno Capital or Zeno or
Zeno. I think on Twitter it's like Zeno Awake or something like that.
yeah.
Zeno yeah, it's my put. So I used to create content, right? It's kind of my push to become more pseudo anonymous, given the volatile nature of public figures, right?
Yeah.
So yeah, doesn't work too well when people already know who you are. But yeah, it's like Zeno or Zeno Awake or whatever. It's and at this point, like I actually don't want to grow my socials. It's just a soundboard. It's like a point of record. Which actually makes me wish that we would adopt more on-chain social platforms, because at this point, like I'm not here for shares. I'm here for like a social record.
Right.
Someone can come back and check my thoughts, including myself. Yeah. What was I thinking back then?
Well, very cool. Thanks everybody. Thanks everyone for tuning in home, and we'll see you tomorrow. Garrett has a llama party coming.
Oh, nice.
Right. Thanks everybody.